What's going on, everybody? Michael Silva here to do a technical analysis update on the S&P 500. What a day, what a day. We're going to be going into the daily time frame. We're going to follow up on yesterday's video on the trade plan in the 30-minute time frame. And then I'm going to dive into a little bit something different I wanted to share with you, and that is the individual sector that's really driving this market upwards, at least in the last 3 months. The one that's more volatile, let's say. And if it's your first time here watching my channel, I do these S&P 500 technical analysis videos every day. I also post my stock watch list. I do live trading and also have videos on quick tips. So be sure to subscribe for more content. Let's go ahead and hop into today's S&P 500 technical analysis update. All right, so we are here at the daily time frame and looking at today's price action, very bullish. It not only gapped up and had a little bit of a pullback, it did bounce from an interesting area of support, which I'll follow up there on the 30-minute time frame. That's something that we talked about in yesterday's video. And then it pushed itself up and made it close on the high of the day. That is a very bullish sign, like saying, hey bears, the bulls are here, and they are continuing to push into this red zone of resistance that we've been calling the bear camp. So bulls are definitely there. They're there to fight. Keep a close eye on what's going to happen. Now, this could very well just gap down tomorrow and get crushed. But, I mean, the reason why I say that, even though that is bullish, is because we had a bearish candles, you know, for example, right here, and even right over here too. They're bearish kind of looking candles, but then all of a sudden the market gaps up on whatever kind of news or the economy opening up and so forth, and then all of a sudden the market gets pushed up higher and higher. But what is really driving the market? What is driving the S&P 500? That is what I want to take a look at really quick, just to give you guys a good idea as to if it's going to continue. And I feel like it's at a very important level right now. So let's go ahead and hop into the sectors. All right, so here are the sectors that make up the S&P 500. Look it up here today. Today's drivers were around the financial and the industrials. Now, if you look at the monthly performance, or actually, you know what, the weekly, monthly or weekly, the week has really been driven from these top three. Financials leading the way, industrials, and surprisingly enough, real estate. And then if you go to the volatility metric, you have a 4% volatility here on the financials. So the financials portion is what I want to show you, kind of where it's charting. So this has been that key driver into the S&P 500 for basically this last week, you know, a positive double digit here, 11%. So let's go ahead and just look at the SPF chart that makes up that financial sector. All right, so this is the daily chart of the SPF. This is the financials within the S&P 500. So I just want you to pay close attention here. Like, look at this move this last couple of weeks right here, from basically a low of 333 all the way up to about 400. In these last two power moving days in the financial sector with high volume, and the MACD does look like it's also spreading open, that has been really helping drive the market upwards. Now, where can we might start seeing resistance with this? Well, we have a couple areas. So one being this red line right here. Notice that it did just break above this resistance pretty powerfully. So you got to be like, okay, where can this head? The next one is where these candles were. So notice how it opened here, basically closed here, and then just opened the next day right here, and then just got hammered down. So this is going to be some overhead resistance right in this area. So will we see the market, you know, reverse because the S&P financial sector will get potentially destroyed tomorrow? Maybe, maybe not. But there's also this level that I want you to keep a close eye on right there. Okay, it acted as support. Obviously, it dropped down and then bounced from this point and then crushed through it. So there is some overhead resistance. And then we also have the 200-day period moving average. That's also next to a lot of resistance there. So the financial sector has been making some big moves these last few days, but it's going to be interesting to see where it might start potentially turning around. Now, is the financial market doing that well? Well, in my personal opinion, no. I don't understand how the financial sector, anybody wants to really invest in it. But apparently, these last few days, this last few weeks, it's been really helping drive the S&P 500. But I just wanted to note out that it does look like it has some pretty big overhead resistance in the near future. Being that it's a most volatile piece of the S&P 500 as of right now, this could potentially really drag that down. All right, so here is the 30-minute time frame on the S&P 500. What I want to do is I want to follow up on yesterday's trade plan that I talked about. And if you didn't watch the video, that's okay. I want to show you what that trend line did and how it looked and how, you know, it acted as support and resistance. And potentially this would have made you some money if you actually traded this. So as you can see, the market opened up here today on May 27th, right? Opened up, moved up a little bit, basically to the resistance of this right here, this candle of yesterday's opening candle for the 30-minute time frame. So basically 30.21. Now, on yesterday's trade plan, what I walked over as a potentially good short opportunity was you would enter in from this range right down here on the retest all the way up to basically this range right here, and then get stopped out right around 30.25. So if you did play this short and you managed your trade like we said, you could have potentially made some money here for sure. So basically how I see this playing out is if you did enter in, or when the market opened up and if you started buying into some trades up here, you would have got a really good position. Your stop loss would have been 30.25. It would have not have got stopped out, and you would have hit your first price target. Now we drew out this support, and as you can see, the market came down and it went a little bit lower, like it was like, hey, it might be heading lower, and then it started to make a higher lows from this point. And then this support here really held up. As you can see, the market got pushed down below it and then closed right at it, went below it a little bit higher, closed below it, and then it really bounced from that point on. Now, that means you would have hit your first price target, and you might have been thinking, hey, but I was going to stop out here and then more here and then let it go. Well, the thing is, to move that much in a simple, in one day is a pretty big movement for the S&P 500. So you might have gotten stopped out on your remaining shares if that was the case right up here at the end of the day. Or what you would have done or could have done, this is my kind of strategy, what I typically do is I follow these candles down. So I would have entered in right around this range, and then my next stop loss would have been down here above the high of this candle, because when you short, you need to be aggressive. And then on this candle, I would have moved my stop loss down to here, and then I would have taken profits, and then I would have moved my stop loss right down here above this candle, and then boom, I would have gotten stopped out basically right here. So my profit would have been from, 30.15, let's call it, down to, I would have taken profits here, 29.80, and then I would have got stopped out at 29.93. So that would have been a green trade if you managed it. Now, if you held on to something like this and you didn't take profits, that's what I want to point out. You don't need to always be right as to where the trade takes place. Like, for example, in today's live trading video, my trade, I mean, it was yesterday's technically trading video, but I posted it today. My trade didn't turn out how I wanted it to turn out, but I still managed to make profits because of how you managed the trade. So here, if you would have done all of that, you would have managed the trade and would have ended up green, even though the day would have stopped you out if you would have held it in. So manage your trade. Don't get greedy. Pigs go to the slaughterhouse. These are all specific, like, Wall Street adages, I think. So we had this trend line right here, this yesterday that I drew out that I was like, it might or might not play out. Well, it gapped above that today, pushed a little higher, and then got rejected. So I was like, hey, maybe it is in play. And as you can see, it came up here, got rejected a little bit, consolidated sideways, and then boom, it really broke that trend line and started moving up. So now this trend line is the one you want to watch on the 30-minute time frame, because you might get that retest, or it might continue to move to the upside, but it's just kind of still there. So now, where is our resistance at? Well, if we look back, holy moly, this thing could move, because we don't have that much resistance other than way over here, right? So 30.40, 30.50, I would say, yeah, 30.40 to 30.50. This is where this 30-minute time frame is going to start getting some resistance. I'm going to call it 30.50 just to, be safe here. It's a nice round number. A lot of people's eyes will be on the round numbers. It's 30.50, but really it's like just below that. So you'll have some overhead resistance here. Where's the support at? Well, once resistance is broken, it then becomes support. So this trend line right here is now support, okay? Also, you obviously have right here as well is now support, because of the fact that because of the fact that this candle came up here and it acted as resistance. So really, you can look at this trend line as support, or you can just, you know, have this as support. But we'll just keep it up there just for illustration purposes. So resistant right here. Like I said, this whole zone on the daily time frame is the bear's camp. It does look like the S&P 500 wants to head higher at this particular time, but anything and everything typically happens in this market. So be safe out there. I don't have a trade plan kind of set up for this specific chart. I guess the only thing that you might be able to do in this environment is if it retests, so this breakout right here, if it retests this line, 30.22, you can enter in long right here because you might, you know, retest it and bounce up higher. Just have a tight, you know, risk versus reward there. So on the back test, you basically buy in right here at 30.25, and then you have a stop loss right here at 30.19, or just a little bit lower, 30.15. Give it some breathing room. Well, that's all I have for you today on today's technical analysis update on the S&P 500. I'm out of breath and I need some water. All right, everybody, have a good day.